Upasna Bhardwaj joins us, Chief Economist with Kotak Mahindra Bank. Upasna, what exactly do you expect to hear from today's IIP data? First, what do you expect, and B, what is the relevance of today's data?
Yeah, as was mentioned earlier, clearly there is a softening bias which is witnessed across the board. If you look at the high frequency data, we too are expecting a softness in IIP from compared to a 3% in the previous month. In April, we're looking at 1.3%. A little bit of support comes because March to April, we do tend to see a favorable base effect building up, and that tends to slightly support IIP on a Y-on-Y basis, but on a month-on-month basis also, we tend to see that sequential pickup. But if we look at the sequential index, that is likely to fall significantly. And particularly, I mean, mining is known. That is going to be showing a significant downside. Electricity from the core sector, we already have seen that is suggesting a very soft data. And even manufacturing. While it will be a positive Y-on-Y growth, we believe that it is going to be softer than the previous reading in March. So I think overall, the data will be fairly muted, and that will be nothing but a reflection of how the economy is faring since March, I would say. There is a slowdown which is witnessed. Of course, there is a mixed bag of data which is there. It is not that all is in red. But having said that, a fair amount of data is appearing adverse, and that is the slowdown which will be witnessed in the IIP data as well.
What the core infra industries data is actually telling you, Upasna? Because yes, the slowdown, like you said, is pretty evident. But does it seem like it's going to get worse from here when you look at the data points, especially from industries such as coal, crude oil, petroleum refinery products, fertilizers, etc.?
I do expect some further softening actually over the next few months in this data. But having said that, we need to keep in mind that much of the overall IIP and even within core, we have a lot of elements which tend to be extremely volatile. And, that tends to move in very erratic manner. So we have to keep that also in mind. But having said that, we are expecting that, the capital goods sector should continue to, or the investment cycle should weaken from here to an extent, and that should reflect in the data overall. So I think, next 3 to 4 months are likely to be further softness before we can see some stability in economic data.
But the relevance of IIP data, some would say, is losing its relevance. Why? Because now, A, it's a back-ended data. B, so many things are moving at a global level and so fast that by the time the data comes out, the trends have changed again.
See, I think when we're looking at the relevance, the data has started getting released now 2 weeks in advance. It is now giving us 1 month back data, which is not so bad. I mean, we should look at it in that context. So data is not entirely backdated anymore. It's 1 month lag, which is an acceptable data. We're getting this data for April. There are a whole lot of high frequency data which is still not available for the month of April. That's one. Secondly, this is while it is a volatile component, a lot of dynamic changes have yet to be incorporated again once we have a new base. But I think even then, this is a good indicator for real indicator. It's a good real indicator, I would say, pure indicator to that extent. It does give us a sense on how the economy is faring, even though not in total. So we should not completely say that this is not redundant. This has gone redundant or so. I would say this is not as backdated now that we are getting this data 2 weeks in advance than what we used to get earlier. And secondly, it is a real indicator. It tells you the volumes of production. It tells you the actual level of production in the economy. So it does provide you a direction, maybe not accurately, but it does give you a fair sense in which way the economy is heading.
Given that 30 to 35% of the weightage in IIP is on account of exports, I wanted to understand what your calculation is about the impact or the hit of tariffs.
We are still awaiting the US-India trade deal. to see exactly how this is going to materialize. But clearly there is this element of uncertainty, which in turn is likely to keep the trends on the muted side, keep the trends tepid over the next few months before some clarity is established. I think what has happened really is because of the trade related policies and the disruptions related to that, we are in that period of uncertainty, which is likely to postpone decisions. And that will have a bearing on the outlook on growth indicators going ahead. Secondly, ahead of the tariff policies being announced, we've already seen a fair amount of front loading of actions. If you look at the US India trade balance, or in general, the US trade deficit, basically, for the month of March, then we did see a spike in the US trade deficit for March. Not just for March, actually for the last previous 1 or 2 months before that as well. So there has been a front loading of trade that has been happening. So I think that runoff also has to happen in terms of normalization. So we expect that the next few months are going to be continuing to be a little soft to that extent, basically because of normalization as well and uncertainty along with that.
Interesting. Upasna, just last evening, the IMD held its press conference and they're saying it's going to be an above normal monsoon, other than, of course, the early onset that's happened in few parts of the country. Tell me, what is it that you're penciling in terms of what the rural economy is going to do now that monsoon seems on track?
Yes, I think the prospects of the rural economy look firm. They look good. If we were to compare between urban and rural, then at this point, while the urban demand is kind of getting support from some of the measures which have been adopted by the government in terms of income tax cuts, some rate cuts are happening, inflation is moderating, so that is likely to be slightly supportive of the urban demand. On the rural side, the monsoons are likely to provide for good kharif output eventually and provide a good boost to the rural demand. I think this is something which is going to hold up growth. Consumption will be the driver of growth because we expect investment to remain weak through the course of the year.
All right, Upasna, so good having you today on the channel. Thank you so much for taking the time out and speaking with us and helping us with an estimate what really to expect from the IIP data.
If you like this video, then like, share and subscribe to ET Now.